Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's session outlook. Firstly, we're going to take a look at what happened yesterday. We're looking at the chart, by the way, the euro versus the dollar. Despite the better manufacturing sector in Europe, as it actually came out mostly positive for all indicators, we saw the euro declining, sidelining on the previous session, but declining today. That is due to the next possible explanation, which is today's Federal Open Market Committee minutes. Now, speaking of which, of course, just a few minutes ago, we have received also the data for the consumer price index. It also came out positive. And as we can see, the euro is retracing versus the slightly lower US dollar. However, the area, which is extremely sensitive at 1.0530, should be holding grounds as a resistance area for the pair to further decline. Therefore, it's very interesting right now to see whether the pair would bounce off of that area for further declines. And for now, we would be staying on the sidelines as to see whether that would be confirmed. Also, earlier in the session, we have seen for sterling that areas around 1.25 versus the US dollar are actually a strong resistance area from where we saw the pair bouncing to the downside earlier. And of course, further down the road, we should see a consolidation between 124 and 125. A break off of this range, of course, would bring us a new direction of the pair. For now, of course, it's range bound for quite some time. Therefore, a range trading strategy would be appropriate for this pair, and also for the US dollar versus the JPY, JPY, of course, we see the 113 area, very strong support for quite some time here, as we can see. If it manages to break down as the dollar is weakening just ahead of the FOMC meeting, we can see further downside towards areas around 112.70 and of course 112 as well. Also, looking at commodities here, let's check that first and see what we are to expect today and tomorrow from the fundamental side of the market. Of course, we see gold prices right now trading at 1237.44. Areas around the 1242, 1243, of course, are sensitive for the metal to the upside, and areas around 1233 are also sensitive to the downside for the commodity, which we'll of course keep monitoring for the time being ahead of the FOMC. And of course, we're going to be looking for some clues of the next timing of their interest rate hike, whether it's going to be March or the following month in April. That remains to be seen. Right now, it's also range bound. Looking at crude oil, as expected earlier, it is testing right now the 50 exponential moving average, trading around their areas about $54 a barrel, as it reached in the previous session as high as the 55 zone, and that was supported by the OPEC. Of course, today, later in the U.S. session, we're expecting the Federal Open Market Committee to make a statement, a possible hawkish mood from the Federal Open Market Committee. We can see some downside from gold as to a strengthening dollar. As we can see, gold is very sensitive to increasing interest rates. Also, tomorrow, in Thursday, we could see some possible same direction. Should the FOMC be hawkish today, we can see some positive numbers for the weekly job data from US, and of course gold prices could keep declining through the rest of the week. And also we're going to be seeing the Energy Information Administration bringing out the weekly crude oil stockpiles data. That's, of course, all of the fundamentals until the rest of the week. So I'm going to see you again tomorrow with the latest breakdown of the Federal Open Market Committee minutes. That's all for today. See you tomorrow again. Bye-bye.